Herco is going to talk about a holistic approach to crypto asset regulations from a South African perspective. Do your thing, Herco, and I will be behind watching, as this is quite an interesting topic as well. Thank you.
Perfect. Thanks so much, John. It's wonderful to be here. Good afternoon, ladies and gentlemen. Just a very warm word of thanks to Sonia Kunel and her team from Bitcoin Events for the stellar job they've historically done in hosting this event, and many thanks for inviting me to share kind of a regulatory view on crypto asset regulation. So my name is Herco Steyn from the SARB's Fintech unit, but perhaps for the purposes of this session, I am wearing two hats, one as an employee of the SARB, and then also in my role as chairing the working group on crypto asset regulation, which is a subcommittee of the Intergovernmental Fintech working group. So with that, I will hope to make the case for the regulators, and I think there's often, I suppose, quite well-founded frustration around the slow-moving regulatory architecture. So today I will maybe just give some insight into what makes crypto assets so challenging to regulate and to regulate appropriately. Maybe just in terms of the normal disclaimers, the views I share today are my own and do not necessarily represent those of the SARB or the Intergovernmental Fintech Working Group. I also greatly look forward to taking your questions, so yeah, please do keep them coming, and happy to answer them at the end. So just in terms of what we'll be covering today, what I will be covering today, as a starting point, I'll talk through the fundamental policy question posed by crypto assets, a very well-versed question, but maybe just go into the nuances around that. And from that basis, I will talk firstly to the difficulty in regulating crypto assets from a legal perspective, before talking to the challenges posed in or by crypto assets from a regulatory perspective. And then I'll provide a brief overview of the South African crypto journey to date and give some insight into where we are kind of as we are speaking. So with that, I think at its core, I would like to get to the fundamental policy question posed by crypto assets. And this is a very well-known question, and I think the key question crypto consistently raises on an ongoing basis. And I think this is at the heart of much of, if not most of, the debate around crypto. So I think at a very high level, it kind of asks and it forces us to kind of reconsider this kind of public versus private money debate, which has every now and again come up throughout history. So and I think it again forces us to, at a very fundamental philosophical level, reflect on what is money and who has the right to issue it. So my sense is that this is a really interesting question, but I don't think this is the full question. So to contextualize what I mean by that, I think the full question posed by crypto more generally is actually what is money, both from a legal and a social perspective, and who has the right to issue it then. And then also you have to qualify that question by kind of determining, is money viewed as a legal construct or a social construct, or potentially both. So if you view money as a social construct, you need a social definition of it. So kind of this is also, I think, very much in the crypto space, money is as money does. So where the definition of money is basically anything that is accepted as money, and where the buyer and the seller can agree on the amount and the kind of medium of exchange that serves the purpose of money. But then on the other hand, if you view money as a legal construct, you need a legal definition. And this is where we kind of get into the debate around legal tender. Money is legal tender. So against that background, I think the disconnect historically since the inception of crypto, now a bit more than a decade ago, is kind of the disconnect, or what I refer to as the disconnect between the regulators and the crypto enthusiasts, or the crypto evangelists even. So I think central banks, regulators, governments, they've been quite clear that crypto is not money in the legal sense. But then they have actually also indicated that although crypto is not money in the legal sense, crypto assets can perform certain functions associated with money. And this is where we get to the social sense, or the social definition of money. So I think, kind of broadly speaking, I think kind of the crypto enthusiasts agree that the crypto is not money in the legal sense, But I think they make the point around crypto being money in the social sense. And I think this is almost the basis of some of the, I suppose, differences in perspectives. Because in the context of regulation, the legal view is assumed, and that is there's no way getting around that. That is just the manner in which the legal system is structured. So then against that background, I think the difficulty in regulating crypto assets from a legal perspective, if we look at some of the domestic legal definitions and kind of try and tie that back or reconcile that with the phenomenon of crypto, if we look at legal tender as defined in the South African Reserve Bank Act, it is essentially defined as notes and coins issued by the SARB. Then similarly, the National Payment System Act, it again refers to money, specifically denoting notes and coins issued by the SARB. Then the NPS Act also defines e-money, but indicates that only registered South African banks are allowed to issue e-money. And then the Banks Act, it is very much hinged on the concept of deposit taking and what constitutes deposit taking as defined under the business of a bank in the Banks Act. And again, there we have the kind of the challenge that from a legal perspective, or as defined in the legal document, a deposit also refers to money, which again refers to legal tender as defined in the SARB Act. And then even in the exchange control regulations, under the definition of foreign currency, it says any currency that is not legal tender in the Republic. And then this part in brackets is kind of implied, but it is legal tender in another country. And broadly speaking, crypto is not kind of legal tender, generally speaking. So money, again, is foreign exchange, which is legal tender in another country. So it also, the implied or the legal kind of basis does not cover crypto assets, obviously explicitly, but also not implicitly. And that is one of the challenges in regulating and appropriately regulating crypto assets. Just very briefly, maybe a misconception about or around legal tender. So I think we've kind of established now that crypto is not legal tender, with the caveat in the kind of legal sense of the word, or because legal tender is just notes and coins issued by the SARB. But I think an interesting thing that I find quite interesting is that legal tender essentially obligates merchants to accept payment offered in legal tender. So you cannot refuse if someone wants to pay you in legal tender. So and this is so quite a few industry participants have kind of raised the idea of, or said, if you kind of open up the question and say, what would you like to see? How would you like us kind of to approach crypto and associated regulatory framework? Then some commentators have indicated that they would like crypto to be designated as legal tender. So kind of the challenge around something like that, from a practical perspective, apart from the mandate legal issues, is it will oblige people to accept it. So even the informal merchant, if technically if you want to go and buy something from an informal pay in crypto, he or she will have to accept that, or would be obliged to. But then just on the other side of so I think this is quite an interesting question. So what does it mean if something is not legal tender, like crypto, as we've kind of now deduced? Does it mean that you may not accept it? And almost reflecting on the opposite of that, if something is not legal tender, does that mean it is illegal tender? So obviously not. It basically just means if something is not legal tender, you are not obliged to accept it when tendered as a means of payment or medium of exchange, but you may still do so of your own kind of volition. So I think that's then the kind of the first challenge is crypto is not explicitly defined in law, in South African law, but this is not a unique South African problem. So now kind of getting to the options, or maybe just kind of reiterating the challenge is that, so basically we have the challenge around legacy laws and regulations that were drafted long before something like crypto was even conceived. And now the challenge is to kind of reconcile that with something that it was not meant to cater for when it was drafted. So the emerging challenge is how to treat such financial innovations. And there are essentially two options that countries or jurisdictions have. They can issue new legislation, or they can amend existing legislation. So some countries have gone the route of issuing fintech or even crypto-specific legislation. But I think at the heart of it, kind of from a South African perspective, we very much think around it. How do we ensure a level playing field in accordance with the principle of the same risk, same rules? So I think the guiding principle is that neither the new entrants nor the incumbents should be unduly advantaged or disadvantaged. So to this end and against this background, South Africa has adopted an activity-based approach to crypto asset regulation. Kind of looking through the I suppose the technology, etc., at the underlying activity performed, and then map that activity back to the existing legal and regulatory framework. And I think we will then only consider amending existing frameworks if the activity is not appropriately catered for under the existing legislation. And as I will explain shortly, that point has very much now arrived. So then just the challenges posed by crypto from a regulatory perspective. I think if we kind of, so this is just a screenshot of the market cap, I think yesterday. So if we look at the top 10 crypto assets, so I think the bottom line is essentially there are almost 9,000 crypto assets, and I use the word kind of unique very loosely, but almost 9,000 unique crypto assets in existence. So I don't think all of them have a truly unique value proposition, but many of them have nuanced differences in their value propositions in terms of what they can potentially function as, what they were designed to function. So just looking at kind of these 10 crypto assets, we potentially get to numerous, and this list is not exhaustive in terms of the potential or possible economic activities that crypto assets can perform. So they can function in various ways depending on their design, etc. So they can function as a payment instrument, both for domestic and cross-border payments. It is also, some of them is not only kind of a token, but also a payment system with kind of associated implications around clearing and settlement activities. They can function as an investment in various different forms. Kind of if you think about something like the pooling of investments, capital raising, whether that is through an ICO, it's some type of pooling of funds. Is it kind of akin to a collective investment scheme? If you stake your crypto for some type of reward, what is the underlying activity that kind of that performs? And how should that be treated? Depending on the design, again, the token could function as a security, could function as an international remittance instrument. Then also, I think if we go back to the example of how money, legal tender, etc., is codified in law, we get kind of this interesting position that some crypto exchanges across the world, they offer custody of their customers' crypto, and they actually then offer some type of interest payment on kind of crypto interest payments on crypto holdings held with the exchange, whether staked or not, and there are obviously many different permutations of the business model. But that very much is bank-like activities, kind of just with the caveat or the legal technicality that it is not defined as money as such, and therefore is excluded in the South African context from the banking legislation, broadly speaking. So apart from kind of the activities that crypto can perform, I think there's then obviously through how the market has evolved over the last 12 years or so, there's an advisory and intermediary component. There's credit or potential credit component. Obviously, money laundering, terrorist financing, well documented concerns, competition element, and all this then kind of feeds into how would that be treated from a tax perspective, and then obviously also the ongoing conduct and fraud related concerns. So I think this is kind of in a nutshell, from a regulatory perspective, a real challenge around how to go about regulating crypto assets, because they can potentially cut across different areas, different regulators, etc. So just looking at kind of these activities, etc., it's quite clear that quite a few South African financial sector laws will come into play depending on how the crypto asset is used. So this kind of leads to what I broadly refer to as the trilemma of crypto asset regulation. So I think, with crypto, we have a phenomenon that firstly can potentially perform different economic functions depending on its design and use. Secondly, crypto is not explicitly captured in legacy laws and accompanying rules, and I think quite interestingly, whether that is enabling or prohibitive. So I think this is where many observers kind of feel that crypto is operating in a type of a grey area. So then thirdly, I think crypto and the associated activities. If you look at probably the last 2 years, it's just mind-boggling kind of what the developments that have taken place. And kind of the growing interest in DeFi specifically, and kind of from a regulatory perspective, how to treat that. It's a kind of a real and ongoing process for the regulators to reflect on, to ensure that the framework remains appropriate. So maybe just briefly on the South African crypto journey, and tying this back to the focus of the session. And I think the purpose of naming it a holistic approach to crypto asset regulation, it basically means, or the rationale is that kind of if you go this process alone as an individual regulator, chances are there might be regulatory underlap, etc. So I think due to the challenges around defining it in law, the cross-cutting function and associated activities of crypto assets, and then the different financial sector regulators who are responsible or mandated in terms of the different pieces of financial sector laws, means that a collaborative and holistic approach to crypto asset regulation is basically a given. You cannot get away from that, and I think that is essentially the approach that the South African authorities took predominantly via the Intergovernmental Fintech Working Group. So the IFWG was established in 2016. The founding members were the Financial Intelligence Center, the Financial Sector Conduct Authority, the National Treasury, and the South African Reserve Bank. Members have since grown by 3, or membership, to also include the National Credit Regulator, the South African Revenue Service, and the Competition Commission, with other members also under consideration. So getting to the crypto component specifically, the Crypto Assets Regulatory Working Group, or the CAR Working Group, was established in 2018 as a subcommittee of the IFWG. And I'm kind of smiling around when I see this. It will soon publish the final crypto asset position paper under the auspices of the IFWG. So I think, given the highly collaborative and kind of, I suppose, consensus building mechanism that is the IFWG, and then also manifesting through the work of the core working group, we feel quite strongly that, because it is so cross-cutting, all the IFWG members need to buy in fully to the paper and the position taken and the relevant recommendations. So just very briefly, the working group started by identifying different crypto asset use cases in South Africa, that then fed into a consultation paper depicting or defining the use cases and the associated potential implications. And then that ultimately fed into the policy paper. So I think the caveat that it will soon be published, what is soon, we hope within the next few weeks, if we can kind of agree and reach consensus on the remaining outstanding issues as a collective, as the IFWG. So that is really what we are working towards. just very briefly at a high level, and I would like to leave some time for questions. Currently the crypto asset position paper, or the core working group position paper on crypto assets, it essentially makes 25 recommendations, which are in some way a roadmap for the future, or to most appropriately bring crypto assets within the domestic regulatory remit. The 25 recommendations contained in the paper are essentially made across 3 categories. The first category is around anti-money laundering and CFT. That process of amending Schedule 1 to the FIC Act to include crypto asset service providers, or CASPs, as accountable institutions is underway and ongoing, and steady progress is being made in that sense. The other big bucket is kind of, if I can maybe skip over number 2 for now, is around kind of amending the framework for monitoring cross-border financial flows, specifically in the context of crypto. And I think this is one of the really interesting areas, is how do we reconcile crypto, which is essentially something that was designed to be borderless and natively and exclusively digital, and how to reconcile that with like a exchange control framework, such as the one that is in place in South Africa. So there are a few recommendations specifically dedicated to kind of category 3 around monitoring the exchange control implications. And then getting to category 2, crypto asset declaration, and I think this is where the most intricate consideration is, and it is around, so the Financial Sector Conduct Authority, they released recently the proposed draft designation to designate crypto assets as a financial product under the Financial Advisory and Intermediary Services Act. And then something like that is very much discussed and viewed in terms of the potential impact such designation, or designation in terms of one financial sector law, could have on the others. So that's quite something crucial to get right, and that's kind of the slow-moving nature of that process. So with that, I think this is my final slide. Maybe just very briefly, I think some of the key challenges and insights, again, it's the legal designation versus the practical functionality or activity performed that poses an ongoing challenge in a good way. Then I think we sit with legacy legal frameworks that we have to reconcile on an ongoing basis and refine and amend, to appropriately cater for emerging business models that cut across some activities that were previously segregated or significantly more clearly segregated. And then that kind of segregation and the blurring of lines between different regulators potentially leads to, or can potentially lead to, regulatory over and underlap. Therefore, the involvement of different regulators is crucial. Collaboration is crucial, kind of reaching consensus. And I think very much from my side, I think we definitely don't always know best, and therefore it is crucial to engage with the industry to remain close to developments, and to really understand the nuances. So I think with that, thanks very much. That is it from me, and I very much look forward to taking your questions. Thank you.
Herco, thank you very much indeed for such a great insight when it comes to regulation. And I think one of the aspects that a lot of people actually want to find out is, look, we hosting this event out of South Africa, but it's happening globally, right? So many people from around the world are certainly watching this specific event. Okay. Now the question I have for you is the following: why shouldn't we? In fact, that's some of the question that people here as well do have, probably too. Why shouldn't we take a global approach to regulation, especially considering that some people can travel from one country to the next? Or do you see a certain level of, sovereignty?
Yeah, absolutely. That's a great question. So I think the former MD of the IMF, Ms. Christine Lagarde, she had a very nice analogy of kind of referring to what we don't want is a regulatory race to the bottom. where kind of the less stringent or where undesirable activity will simply migrate to less stringently regulated jurisdictions. So I think in that sense, and I think given the truly global nature of crypto, I think there's absolutely a need for some type of kind of minimum international standards, and that is very much being driven through international financial institutions and standard-setting bodies such as the Financial Stability Board. And I think something like Facebook's announcement of Libra, now the Diem association with its kind of Diem token, very much kind of prompted also or it again emphasized the importance of regulatory consistency to prevent opportunities for regulatory arbitrage and to kind of prevent this regulatory race to the bottom. So, yeah, I think let me stop there. Thank you, John.
I'm going to pick up another 2 questions, and I think that will be the end of it. The one question I want to ask is this. Why crypto asset and not digital asset? What happens in the future when new kinds of assets emerge? Say, for example, non-crypto based. Surely a more generic term is better in terms of regulation than anything else. What do you think? What are your thoughts?
Yeah, no, no, I think point well taken. So I think kind of crypto assets is where we've landed on based on our historical discussions. But I think also, look, I think even once we do finalize the paper, publish that, I think the understanding is if we kind of almost analogously refer to the document as a living document. So I think as we kind of are now in the home stretch, once we cross the finish line, I think it will very much just be the end of the first lap, and we'll immediately go into the second lap where we will identify further emerging use cases around kind of market developments, stablecoins, DeFi, and the like. So yeah, so I think so I think the point that I'm trying to make is that the document and even the definition, etc., we will consider the appropriateness of that on an ongoing basis. So yeah, but absolutely to that point. So very well noted.
I'm gonna ask you one last question. This is a tough one for you. You're wearing 2 different hats, right? So from SARB perspective, but also as a fintech lover. But you know what? You are pretty much a crypto enthusiast and believer, I suppose. There is a question here which I found very interesting, right? So this person thinks that this question could be stupid, but I don't think it is stupid. And if government, in fact, let me change it. Do you think government should actually really, truly regulate crypto? And if they do, wouldn't that be really centralized? Wouldn't that be against what the world is actually really living by? What's your thoughts on that?
Yeah, so I think that's a great question. So whoever asked that question, obviously they are not stupid questions. So that's really a really kind of a fundamental question, but such an interesting question. So my view is, if you kind of look at the original Bitcoin white paper, etc., around decentralization, disintermediation, so and kind of also potentially functioning as a peer-to-peer currency. Kind of the currency of the internet, etc. If you look at how things evolved, kind of to where we are now, let's say before kind of the DeFi revolution, so to speak, I think it's kind of interesting that activity has migrated to a different type of intermediary, not kind of traditional intermediary in the form of a bank or similar financial institution, but much of the activity is kind of ongoing via the crypto exchanges. So I think that's quite interesting, and I think that's probably slightly out of line in terms of the original vision around specifically disintermediation, decentralization, peer-to-peer, etc. So I think with DeFi potentially we're seeing some greater comfort from the users and kind of I suppose the interested parties. To again kind of see if they can realize this potential for disintermediation. But let me stop there in the interest of time. Thanks, John.